Good morning. Welcome to our webinar on lump sum funding in Horizon Europe. For the next 2 hours, we're going to look at how lump sum funding works and how you can write proposals for lump sum topics. My name is Ulrich GENSCHEL. I'm head of sector in the Common Implementation Center in DG RTD. And together with my colleague Andreia CHICOS, I'm going to take you through these next 2 hours. We also have 3 guests invited who can present and who will present their first-hand experience with lump sums. After my introductory presentation, that hopefully already answers most of your questions, we'll then have a chance to hear from their first-hand experience. And then afterwards, we'll have hopefully 45 minutes or so to go through all of your questions using Slido. And again, our guest speakers will be there also to help answering your practical questions. Before I go to the first slide, one very general principle is that we cannot in this webinar cover every last detail on how Horizon Europe grants work. What we focus on is what are the specific points for lump sum grants and for lump sum proposals. That is the focus of this webinar. As a general rule, as much as possible, all the processes are the same as for all other grants. So you don't have to really relearn a lot, in fact. The main thing that's different, and that's what we're going to focus on, is how you present the budget and how we reimburse. Lump sum funding is really about how we apply for and reimburse funds, not about anything else. And that's also why we, as you will see all the time, I will come back to that, we use all the same templates wherever possible. Let's get started. So why do we use lump sum funding in the first place? Well, overall, the main reason is that actual cost funding is rather complex and error prone. And we've had for many years a very high error rate in Horizon Europe. And that situation isn't currently changing a lot because we are still, for the most part, have been using actual cost funding. So there's wide agreement that lump sums could be something to address this. The effect of that will, of course, take some time to materialize, but we are on a good path. Then, and at least as important, there is a huge simplification potential. As I mentioned, actual cost system is rather complex and not easy to understand, with a lot of guidance needed to be digested and understood before you can master it. So we have been trying to simplify that for many, many years, and we believe there is that has been come to an end, that has been saturated, these attempts to make actual cost funding yet simpler, and there will be probably no very, very major advances in this direction in the next years. So all the applicants and beneficiaries that do not have a lot of experience, they will remain in a situation where actual costs is difficult for them. And then last but not least, we really hope to focus much more on content. By the sheer fact that we pay and reimburse costs against the completion of work packages, everybody pays a lot more attention to that. So we have a lot more attention to content because both the beneficiaries, grantees, and of course also the project officers, they stop looking at invoices and timesheets, and they look much more at what has happened in the project and has the project done what they agreed to be doing. And that is automatically coming with more focus on content, which we believe is quite desirable. This is some figures to illustrate a bit what I said before. On the right-hand side, you see a graph showing the distribution of the 42,000 unique beneficiaries we had in the previous framework program, Horizon 2020. And overall, the situation is no different in Horizon Europe, and we don't expect that this is going to change in future framework programs either. What we see is that the vast majority of our beneficiary organizations just have one grant in the entire framework program. This is 26,000 out of 42,000. And then this distribution goes steeply down to the right-hand side, where you see organizations that have, or the number of organizations that have many grants. So we end up with just over 200 organizations which have more than 100 grants. In a nutshell, what we see is that the organizations, the small organizations that apply only once and have only one grant, they have a rather high error rate. They struggle with the actual cost system, while organizations that are returning beneficiaries or frequent flyers that are very experienced over many years, they have a much lower error rate. They have adapted to the complexities of the actual cost system. They have specialized staff in place for all of that. So for them, the system is in principle working, I believe. But we need a system that works for all of our beneficiaries. And here, lump sums, we believe, is the solution, because everybody can use that without too much preparatory work and experience. Of course, we need, since lump sum funding is still relatively new, despite the fact that we've been now using it since 2018, since the last years of Horizon 2020, and successively have been using it more, coming to like 50% of the call budget in 26-27. There are still concerns that this system might be difficult for some. That there might be more work to set up the proposal, or that there is no flexibility, or that you have to be successful in your project, or that there's a higher financial risk. Now, we have been monitoring this since many years, and we don't find that these concerns are really justified or have materialized. Main reason are, for example, that to set up a budget in a proposal, we need details in all of our grants and in all of our proposals. The difference is that in lump sum proposals, indeed, you have to submit more budget details, while in an actual cost grants, you have to have them and you have to keep them on file, but you don't submit them as part of the proposal. There is, if anything, more flexibility in lump sum projects because, well, the lump sum can be used in any way you like, as long as you do the work that has been agreed. And of course, it goes without saying, in principle, all of our grants expect that the work is done as agreed and described in the grant agreement. So there's no difference. It's not that we expect higher standards in lump sum projects. As to the financial risk, we will actually see later some data in this presentation showing that, if anything, the level of payment in lump sum grants is slightly higher, although the difference is not really big. There is certainly no indication that beneficiaries are losing funding or are losing money in lump sum grants as compared to the situation in actual cost grants. So I leave it at this point. Just to emphasize that we are, of course, monitoring the situation very carefully, and so far we have not come across any issues that we would consider a blocking issue. This is why lump sum funding is continued. This is why we continue rolling out lump sum funding and also have the intention to use it more in the future. There are two main types of lump sums that we use. Type 1 is where the Commission fixes the amount in the topic, in the work program, and this cannot be changed by the applicant. So it's an approach where we predefine the exact amount. The probably best known example is the ERC proof of concept scheme, where it's predefined. There's a predefined amount of 150,000 euro. This cannot be changed. The applicant applies for exactly that amount and then describes in the proposal what they are going to do with this funding. This is probably the simplest approach that we have, but for the bigger grants, we prefer to use type 2, where indeed the applicants, very much like in any of our actual cost grants, they define the lump sums themselves. They set up the budget, they define all the details, so they don't have to accurately apply for what's indicated in the work program. Just exactly the same approach as in actual cost grants, mimicking the approach that many of you have been used to for many years, except that more details are needed to explain and justify the final amount that the applicants decide to apply for. So when you write a lump sum proposal, I said it before, most of this is exactly the same as in all of our proposals. That is, you use the standard application form. There is no separate application form. It's exactly the same form, and you present the objectives, the work, the methodology in exactly the same way as the, let's say, as the scientific technical content of the proposal is concerned. There is no difference. Then the difference there is that you describe your budget, your lump sum budget, in more detail, and most of you, at least so far, use an Excel file to use that. I come back to that in a minute. The alternative is that you have this implemented, this lump sum budget, in your Part A, that is as part of the administrative forms online in the application form. Both versions currently coexist. There's a technical reason for that, because we are currently replacing that Excel file tool with an online budget table that is integrated in our online submission system. We are rolling this out successively. So the first topics have started using this online form, while all the others currently are still using the Excel file. It's a very simple rule. You either find in your online submission system an Excel file, an Excel template, which then you have to complete and upload afterwards, or you don't find it, and in which case you will find the budget implemented in Part A. There's only these two alternatives. It's never both, and there must be at least one. So what is I think here we have another slide to actually show some of the novelties that come with the work program 26-27. And indeed, here we see it again. The one difference is, or the one novelty is, that we now started using the lump sum budget in the Part A online forms for currently 9 topics. They're all in cluster 5. And over the year 26, we plan to bring this lump sum budget integrated in the online forms to all lump sum topics. The exact speed and exact modalities of that rollout still remain to be defined. That also depends on the IT development, so I can't at this point in time exactly say which topics will come next. But for practical purposes, it suffices to say that look in your online submission system for the topic where you are applying for. You will either find the Part A online form with a budget, or you will find an Excel template, which then you have to complete, one or the other. Then we have another simplification of the proposal form. I mentioned we use exactly the same proposal form as all other Horizon Europe proposals, and this proposal form has been simplified for the work program 26-27 calls by removing certain tables that detailed a number of cost items, that is in particular purchase costs, other cost categories, in-kind contributions. They're no longer there, and the table for equipment, I think, has been simplified at the same time. So it still is there, but it's simplified. In the lump sum scheme, what we would like you to do is, if you are using any of these costs, and we are adapting the instructions to this extent, put the justification for these items in the comments tab or in the comments box. So there are no longer these tables. The advantage is also that now the explanation for cost items and the cost estimates themselves, they come closer to each other. It's a request we also had in the past, to not have the lump sum budget on the one hand and then justifications for some of the cost items in Part B of the proposal, meaning these two, the explanations and the cost estimates themselves are, well, in different locations of the proposal. They are now, in other words, much closer. You have your budget table in Excel, and if you use any of these cost estimates as cost items, justify them in the comments tab or in the comments box, which takes over that function in the online budget. So when writing a lump sum proposal, I mentioned already, you now provide cost estimates for each cost category that exists in Horizon Europe. There is a number of predefined cost categories that we use both in actual cost grants and in lump sum grants. This you simply put according to the according to the template and according to the resolution that is given in that template, you will see that we don't expect you to have accuracy in the sense that you have accuracy after a cost has been incurred and you report exactly the cost that you had. Obviously, upfront, that is not possible. We are always talking about cost estimations, and you are called to provide the best possible estimate at the time of writing your proposal. This is supposed to be the best possible proxy for the actual cost, but it is clear this cannot be the accurate cost. What our measuring stick is that your costs are reasonable and non-excessive. That is what we will ask the experts to check, that none of your items, and in particular the distribution of your costs and the overall level, is reasonable and non-excessive. Yeah, that is the key principle. Goes without saying, it must be in line with the activities that you propose. These estimates will then be calculated, will then be used to calculate a breakdown of the lump sum shares. There is one share for each work package and per participant. That's the resolution you will also later find in the grant agreement and that we use to pay you. We'll see that in a bit more detail later. So here we still say that you will always find the details on that lump sum budget table in the funding and tenders portal. That is true for the Excel table. The online table, of course, is implemented, and the instructions in Part A are part of that online system. So in both cases, of course, you find instructions, and please read them, on how to fill in that budget table. One other specificity is the work packages. So in lump sum, in the lump sum system, as we again see a bit later, we are going to pay you when work packages are completed. That means if you have long-lasting work packages, you can ever only be paid for these work packages at the next reporting stage or at the end of the next reporting period after that work package has been completed. And that could theoretically create some cash flow problems for the project. Therefore, in order to avoid cash flow problems, you may split work packages along the lines of your reporting periods. Now, I really have to emphasize this is an option, and the sole purpose of that is to avoid problems with cash flow, nothing else. And there's also really no other justification than that you have problems with cash flow and that you need to be paid at certain moments for the work that has already been done. However, pay attention, I think I can go to the next slide with that, to show you a concrete example. We really don't want you to use this excessively. There have been some reports that some projects are really excessively splitting work packages to the extent that there are really very, very many. Now, be aware this can work against you in the evaluation, because we instruct our experts very clearly that while it is possible to split work packages, we still expect all the work packages to make sense in the work plan. So to have, let's say, one beneficiary work packages or work packages that are really only single tasks, that could really be a minus in the evaluation. So while you are absolutely allowed to split work packages to address cash flow problems, make sure you don't use this excessively and that your work packages are still a meaningful part of the project. The example that you see here is for what we classically have a single work package for project management that would span the entire project from year 1 to the end of year 4. And you have typically you have 3 reporting periods in such a 4-year project. Now, if you like, you can absolutely split this management work package into 3 work packages, one each for each reporting period. You wouldn't even have to repeat the description of these split work packages because, well, what you do in the project management in the 1st, 2nd and 3rd reporting periods would presumably be the same. So I think I can leave it here. I stress again, splitting work packages is optional. Don't overdo it. Make sure that each work package in the end is still a reasonable part of the work plan. So when we come to evaluation of the lump sum proposal, again, we use standard criteria, all the technical and scientific part, implementation and impact of the project of the proposal is evaluated as always. There's no difference. Again, what is different for lump sums is that under the implementation criterion, we look at the budget. In addition to the, let's say, evaluation, the standard evaluation of the technical scientific aspects of your proposal. And then, as I mentioned, experts will make sure that your cost estimates are reasonable and non-excessive. They will, of course, look whether your resources and how they are distributed across the proposal make sense and allow you to do the activities that you have described in your proposal. So if they find that some of the cost estimates are overestimated, we are asking them to give us concrete recommendations on how to correct those overestimations, and this will then be reflected in a modified lump sum. Now, I can assure you that in fact what we see is the big majority of lump sum proposals that are selected for funding go through this process without changes. That is in the order of 85% of the selected proposals have no changes, but that also means around 15, let's say 1 in 6 proposals do have a change at this stage. That is one or other cost is corrected. So the good news here is that if ever we do these changes to your budget, we do not decrease the score because we consider that a correction of the budget, but not a fault as such. So there is no decrease in chance to be funded. So that is maybe an important point to consider. We can always work on the lump sum budget, but we are not going to penalize you and decrease your chances of being funded, with the sole exception that the lump sum budget is really faulty. That is, parts are missing, it is constructed in a way that it's actually not possible to evaluate it, or it is really not fitting the proposal to an extent that corrections aren't possible anymore to create a lump sum budget that really fits that project. So there is, of course, there's a limit to what we can correct and what we can accept in the lump sum budget. So it's not that any and all lump sum budgets can be accepted. They must, of course, be reasonable, and we must be able to evaluate them. That goes without saying, but this should be the big exception. In all standard cases, we just make a correction or two, and then that project can still be funded. One resource that our experts are using, and you can use it too when you prepare your budget, is the Horizon dashboard for lump sum evaluations. It shows a distribution of how much money was paid, or rather what was budgeted in actual cost grants, I should say, for person months in given countries and given organization types. It's well known that personnel costs in our grants are the big majority of the total cost. Typically, it's on average, it's 2/3 of the funding we hand out is personnel costs. So this is the biggest chunk, and therefore we focus on that one. And it's also known that these costs vary a lot between different European countries and beyond. We also fund many grantees outside Europe. And experts might find it difficult to know what is a reasonable cost for a person month in these countries and in these organization types. That is why we provide the distribution of what was the average cost for a person month in the signed grants that we have signed in the last 3 years. And you can see here the example. It's research organizations in Romania and research organizations in Germany. There is a significant difference in the average cost. But of course, we also see that different organizations in the same country have different costs that they signed in grants in the last 3 years. So I leave it here. And maybe one other important aspect to highlight is what we really expect you to do if you include personnel cost rates that are above the rates that you see here in these distributions. Then we really want to see that you provide an explanation for that. Because in that case, you are in the following situation. This distribution here shows the distribution of costs between the 20th and the 80th percentile, meaning we fully aware there are organizations that have higher costs than that, but in that case, you are in a situation where you are among the 20% most expensive organizations of your type in your country. So compared with your peers, we could say you are among the really expensive ones, among the 20% most expensive ones. And then we want to know why. Especially if you're a lot above this, make sure that you give a compelling reason why that is so, because otherwise there is a very, very significant risk that you will be cut. So it must come out of your proposal. The ideal way to deal with it is if you are really above this distribution, put a clear explanation for that situation in the comments box or in the comments tab in the Excel file. Grant preparation. So congratulations, we have selected your proposal and we are now inviting you to grant preparation, where we follow the standard process as in any other grant. The key difference is we have a special model grant agreement for lump sum grants, which, however, for the largest part is exactly the same as the standard Horizon Europe model grant agreement. All the non-financial parts of this grant agreement are exactly the same. So all the obligations on implementing the grant, on ethics, on integrity, what have you, on dissemination, exploitation. There are many, many other non-financial obligations that you have from this grant agreement. They're all exactly the same. What is different is how we reimburse the costs here by way of lump sum shares that are fixed in this grant agreement. We also have the no negotiation principle. That is, we do not change the project as it has been evaluated and accepted. However, of course, if there are errors, inconsistencies, if there are legal changes, all this can happen in a lump sum grant in the same way as in an actual cost grant. Maybe the consortium still changes at that point in time. Of course, that needs to be reflected in the grant agreement. What we can also do is, if cost recommendations from the experts could not have been taken into account before the invitation, then these will be followed up during grant preparation. So there could well be situations where the experts made recommendations, but they were not clear enough, or they asked questions, and this did not yet lead to a concrete cut in the grant. This will be followed up during grant preparation. You'll then have the opportunity to explain your costs to the project officer, who then will take your input and the recommendation from the expert to take a final decision on whether costs are maintained or partially cut, or well, take a final decision on that point that was mentioned in your evaluation summary report but not yet implemented. So we have in lump sum, in a nutshell, in the lump sum grant, during grant preparation, we can still work on the lump sum budget. I don't really call it a negotiation, but of course there can be open questions on that budget that may still need follow up, and where still we can talk about costs. And then we have let's say a watershed. Once the lump sum grant is signed, we are not going to question that lump sum anymore. We then have the situation where we have defined lump sum shares for each work package and each beneficiary, and we then expect that the project is carried out for that amount, and we are going to pay you according to that schedule, which is fixed in the grant agreement. We are not questioning it, even if any prices might change afterwards. So we do due diligence and try to come up with the best possible proxy for the cost upfront. After we sign the grant agreement, we don't question that anymore. And this is what it looks like in your grant agreement. This is Annex 2 to the grant agreement. An example, you see a table with beneficiaries in the rows and with work packages in the columns. So at the bottom of each column, you see the lump sum share for a work package. And at the end of each row, you see the total lump sum share for each beneficiary. And in the bottom right corner, that is the total lump sum, 3 million in this example, and the lump sum is equal to the maximum grant amount. Now, I mentioned before, you can spend this lump sum in any way you like. There is no cost reporting whatsoever, and as long as you actually implement the grant as it has been agreed and as it has been described in the grant agreement. So we mention here that you need an amendment if you if you want to change that Annex 2, and that goes without saying because it's part of the grant agreement. Here, maybe to give you some more background, and also we have this, I think, very clear in our corporate lump sum guide, you are under no obligation to change this payment schedule, we could call it, or this financial Annex 2. There's no obligation. As long as you implement your lump sum grant, you will in the end get 3 million euro. However, if you deviate and if different beneficiaries maybe in the course of the project do more work or less work, or if you change the shape of work packages, all of which is possible, we come to amendments in a minute, then it may be in your own interest to amend it. And then you can, of course, ask for an amendment where this payment schedule or this Annex 2 is updated. But again, for me, it's important to highlight this is an option you have and you are not obliged to follow it. It may be in your own interest to have this update. And if you want that, then of course, this is only possible with a formal amendment. The Commission, that is maybe also important, will always, and the Commission services, will always use the latest version of this annex to pay your project. So if this is what you have in force in your grant agreement, and you, in this example, and we have accepted work package 4, in this example, you see it's 200,000 euros, you will get the 200,000 euros even if internally your shares and the distribution of work may have changed. This is not visible to us. As long as you deliver work package 4, we are going to reimburse these 200,000 euros. Now, amendments, I mentioned they are, to avoid any misunderstanding, they can be amended in exactly the same way as all other grants that we have. We have now exactly the same procedure and conditions. An amendment cannot change the project substantially. It cannot call into question the award decision. One could also translate that the changes that you make, they should not have led to rejecting the project at evaluation stage, even though that might seem a little bit of a theoretical concept. It's the idea that you cannot, in an amendment, substantially change or make smaller your project. If you find that certain work cannot be done anymore, well, you are going to do some other work for it that is equivalent. And that gets checked, and if accepted, you have a new work plan which then you're expected to follow. So that is all the very, very same principle as in actual cost grants as well. You have here some examples of all the things that can be changed. So indeed, you can, of course, change your work plan. That's totally obvious, necessary in R&I project. You can also change the distribution of lump sum shares. I mentioned before, you are not obliged to, but you can. The consortium can change by adding or removing partners, and so on. You can add subcontracts, you can remove subcontracts. All of that is possible. The only other principle I'd like to highlight for Horizon Europe is that once a work package has been completed, accepted and paid, we consider that to be a closed part of the project and you cannot amend it anymore. Because we have, in this lump sum scheme, we have, if you like, cut the lump sum project into parts. We have defined the price for each of these work packages, and once it's completed and paid, we are not reopening it again. So that is the only thing to consider. The payment schedule is exactly the same again as in actual cost grants. You have a pre-financing payment, and the rules and the conditions and the level of the pre-financing is exactly the same as in all our grants. I think the standard rule is that we have something like 80% of the total maximum is paid as a pre-financing in case you have 2 reporting periods, and 53% of the total is paid as a pre-financing if you have 3 reporting periods. That covers, I think, most of our grants already. Then you'll have an interim payment at the end of each reporting period, where we pay the shares of the lump sums that we have accepted. So if you look again at this schedule, we had a few slides before. Whenever we accept, whenever you report, first of all, I should say, a work package complete and we accept it, the amount that is in your Annex 2 is paid. And that is the nice thing about lump sums, that since this is all predefined, there is no financial reporting. There is an automatic completion of the financial forms and an automatic process to reimburse that pre-agreed amount, provided we have agreed that the work package was completed. Now, at the end, we have the final payment. Again, it's closes the financial aspects, means we have the last payment. At this point, it is actually possible to have partial payments. We don't do this earlier on. At this point, you can also declare that you haven't been able to complete all the work packages. We would always like you to complete the project in full, of course. And therefore, if you haven't been able to complete a work package at a certain point in the middle of the project, as you would have liked to, you will always get the possibility to complete it at a later stage until the end of the project. And then if it still hasn't been possible to complete it in full, you're then allowed to declare it in part. And of course, at this point, it could also be possible that the commission services find that one of your work packages, that we disagree, and that we say one of your work packages isn't complete. This situation is rare, but it also happens. And of course, at the end of the project, we can release, we will release the amount for the mutual insurance mechanism that is retained at the beginning. But again, the mechanism here is absolutely the same, no difference to standard grants. Reporting and payment. You use the standard reporting template, and the key difference is that our reporting template for lump sums doesn't have any financial information, and it doesn't have any information on resources, or rather these sections of the reporting template do not apply to your lump sum grant. You don't need to complete them. So it's a slightly shorter template, if you like, but all the technical, scientific, etc. aspects are identical. What you do in a lump sum project to get paid is the coordinator declares the work packages as completed or not completed. And of course, your technical report should clarify why you believe they are complete, and this should be clear for any experts or project officers who check this report. You cannot, at interim stage, as I mentioned, report an incomplete work package. If it's incomplete, wait and report it at the end of the next reporting period. Only at the end is there the possibility to have a partially completed work package. And I think this is an important principle here at the bottom. It's not dependent on your work package having been successful in the sense of scientific success. It is only dependent on you having done the activities that were described. It is fully clear that we would be very happy, everybody, if your work was highly successful, but that is not a condition to be reimbursed. The key condition to be reimbursed is that you did the work that you have agreed, and that is described in your grant agreement. This is the expectation. You have done these activities, you have performed, you have carried out the grant, and whether it's been successful or not is not a criterion for us to reimburse you. So once you have now declared your work packages, I already mentioned the rest is effectively automated. So this is where the major simplification comes in. There is no financial reporting. The financial statement is automatically generated. Here in this example, you see with the 5 work packages, we see that work package 1 and 3 have been completed, 2 has not been completed, 4 has not been completed, and 5 hasn't even yet been begun. So in this situation, automatically the system will calculate, assuming that work package 1 and 3 have been accepted, that there is a payment of 700,000 euro. All the corresponding financial statements are generated automatically, and there is no other work for you. This is purely also done through the coordinator. There is no interaction needed with any other beneficiary in that project. Yeah, I mentioned that the system, of course, depends very much on when and where and how we accept work packages, because, well, you carry out the project, you report work packages as completed or as partially completed at the end, and then the project officer takes a decision whether or not they accept that. Now, generally speaking, the general line is we accept when you have done the activities. I've mentioned that several times. But I assure you that we don't really expect lump sum projects to perform to a higher standard or better than actual cost grants or any other grants. We can also have a certain room for maneuver for accepting work packages that have been, we call it, essentially completed, or where all essential tasks have been completed, or when you have done equivalent tasks to replace other tasks and you have justified that. That is also possible in your report. You don't need an amendment for that. You can absolutely deviate from the work plan if you explain and justify these deviations in your report. That is in a way equal to doing an amendment. If there's a plausible explanation why you did something else, that is perfectly acceptable. Of course, you can equally use an amendment procedure. Just be sure to start that early enough before you report and before you come to the end of a reporting period, because otherwise the amendment process and your reporting and payment process, they interfere. If ever a work package is rejected, the project officer will always give you the opportunity to explain why, in your view, in fact, it is complete. And then, in other words, there is an interaction to hear your position on why you believe it is complete or it is completed to a higher degree. And only after that, there is a final decision by the project officer to accept partially or not to accept your work package. We mentioned already, you will always get the possibility to report and to improve your work packages until the very end of the project. Only then do we take a final decision on accepting it in full, partially or not. So at intermediate stage, we will always only accept work packages in full or not at all, in which case, if you like, we postpone the decision on this work package until you have tried to improve it. And this is of course possible until the project comes to an end. If it's not possible to complete your work package, you would normally have to tell us why that wasn't the case, because we really want you and we expect you to complete the project in full. So there should be either force majeure or there should be a technical reason explaining why you were not able to really complete your project or individual work packages. And if that is the case, and that normally your technical reasons will be accepted for this, I'd say, then we can accept your lump sum partially. Now we see a few numbers on how this works in practice, and that should hopefully reassure you that we don't treat lump sums very, very strictly, or much more strictly than actual cost grants in their performance. Here you see data from more than 1,000 lump sum grants that have been completed so far by January 26. I split this in Horizon 2020, the previous work framework program, and Horizon Europe on the right-hand side. Together, this is like 3,000 work packages that have so far been declared completed in our grants. And you see that we paid 99% of those as declared, and only 1% were partially rejected. In other words, it absolutely happens that we reject work packages, but that also doesn't mean that we reject them in full. Very often then they are partially rejected, let's say to 5, 10 or 20%. By no means do we reject 1% of the work packages in full. Also at the intermediate payment stage, it does happen that work packages get rejected. At the rate is roughly 2% here. So again, the vast majority of work packages that get reported at intermediate stage are accepted and paid. To us, this indicates that the controls work. We have indeed some consequences both at evaluation stage and at payment stage, but these are not really very, very huge. And the overall effect is that we probably pay lump sums to the extent of 99% of the amount that was initially requested. And that is at least as much as we reimburse for actual costs, maybe very slightly more. So there is absolutely no evidence of an increased financial risk for beneficiaries. To the contrary, if anything, the levels are very slightly higher. Ex post controls. We are, of course, controlling and monitoring lump sum grants for all the non-financial aspects in the same way as we do all other grants. That means, in particular, the proper implementation of the action is the focus, but you also have to comply with all other non-financial obligations. And again, the follow-up during the grant is the same as for all other grants, but there is no financial checks, no financial reviews, and no audits, because there is no obligation to keep financial records and to report them in the first place. To do so, I remind you what you have to keep is all records to show that your project actually took place and that was implemented as you reported and as we agreed you were going to implement it. That means any kind of technical document, lab books, documentation that came out of the project that you need to keep in case we want to check. But what you don't need to keep is any documentation on related to financial reporting or resources, that is the timesheets. They are not needed in lump sum projects. You don't need paid slips. You don't need depreciation documents. You don't need invoices, anything that would be needed to show to the Commission services the actual costs that you have incurred during the project. There's one caveat here at the bottom, and that, of course, this does not mean that you don't have to comply with your internal processes or any national rules that you may have to comply with. This is, it goes without saying, I hope. This is only for the contractual relationship that you have between the Commission and the consortium. There you don't need any of this, anything that you may need if your, let's say, organization decides that they use timesheets, because that's the way they are organized. Of course, you need the timesheets, but not for the purpose of reporting to us. That is an important caveat here. So we have a main page on the report on the funding and tenders portal, summarizing all the resources we have. On the lump sum page that gives you all the guidance documents. We have videos to introduce you to lump sum funding, initially created for experts, but I think they're equally useful for somebody who's new to lump sum funding, to introduce you to the ideas, concept, and how we evaluate it. That should also be a quick and useful introduction, certainly for newcomers, but there's quite a lot of resources available. In case you need more information, please go to this page. You can also, as always, contact the Research Inquiry Service also for any and all of your questions related to lump sums. And then, just to finish, we mentioned a few current developments. We are continuing, as I mentioned, to monitor lump sums. We have already had some reports, one in 21 and now another one in 24. Those are published reports giving an overview of how our beneficiaries perceived and how they worked with the lump sums, and some data analysis coming from hard granting data that we have. There is now the ex post technical review in place, which is, if you like, an in-depth version of the existing project reviews, where we indeed, after we have made a payment or after the end of the lump sum project, check that indeed you have implemented the project as agreed and as you reported to us. This is effectively an ex post control that replaces financial audits that we use for the actual cost grants. So in lump sum grants, we sample a small number of projects where we look in depth indeed whether they have done as they explained, as they reported, as we have agreed in the grant agreement. And already mentioned, we are currently rolling out the online lump sum form to all projects. We hope to have that finished by the end of this year, such that then all lump sum proposals will use the online form and the Excel file will be a thing of the past. We know that this Excel file is complex and comes with a number of disadvantages. It's a rather big IT development. That's why we can't do it very quickly and easily. But by the end of this year, bear with me, I hope nobody will have to use the Excel file anymore. With that, I think we are at the end of the presentation. I hope we have already answered a few of your questions, and we will now come to the section where the experienced lump sum beneficiaries will tell us a bit or how the system worked for them. Over to you, Andreia.
Thank you, Ulrich, and good morning, everyone. Indeed, just like in our previous editions, now in this second part of the webinar, we will continue with our panel discussion with our speaker guests who are connected online. and who are or were involved directly in the management of lump sum projects. And they will share with us some lessons learned, some best practices. And I am happy to welcome Martin Valach, Administrator Officer, and Professor Drahoslav Lančarič from the Slovak University of Agriculture in Nitra. So they coordinated the lump sum project Invest for Excellence under Horizon 2020. And last but not least, Silvia Morales de la Rosa, who is a researcher at the Spanish Council for Scientific Research in Spain, and who is coordinating the Horizon Europe project Fuelge. And over the next half hour, we will hear from them how lump sums worked in practice. And if you have some questions for our speakers, please feel free to enter these in Slido. I think you already have the details how to connect on Slido, so you need to use the code LUMPSUM on slido.com. So please ask your question there, or maybe upvote some other questions that were already introduced. And we will make sure to allocate questions for our speakers also in the Q&A part later on. So I will start now with some introductory questions, and then we will get to some more specific ones. And I will start with you, Martin and Drahoslav. So could you please introduce yourself and say a few words about the project you coordinated?
Okay, so thank you very much for the invitation to this session. My name is Martin Valach. I was the project administrator of the Invest for Excellence project, and here is Professor Drahoslav Lančarič, who was in charge of scientific supervision of the project. The project titled Invest for Excellence. It was a complementary project to Invest EU University Alliance. I think it was in the second round of calls for supporting EU University Alliance. So it was in the scheme for identified beneficiaries. Project title was Invest for Excellence in Regional Sustainability. Project lasted 3 years from October 2021 until September 2024. So now the project is completed. All deliverables and all outcomes of the projects are done and finished. Project consortium consisted of 5 partners. We, as a coordination institution, was the Slovak University of Agriculture in Slovakia, and we have partners from Bulgaria, from Finland, from Netherlands, and from Greece. So I think that the geographical balance of the consortium was very well. And I think it was also one of the success point of our project. So I think that this is all from my side from the introduction.
Thank you, Martin. And I will turn now to Silvia and ask you as well to introduce yourself and the lump sum project that you are coordinating. So at what stage is it now and when did it start?
Good morning. First of all, thank you very much for the invitation to share my experience with lump sum project in this interesting and useful webinar. I hold a PhD in chemistry, and I'm researcher at the Institute of Catalysis and Petrochemistry of CSIC in Spain. Currently, I am coordinating the Fuelge project. It's a lump sum project, and I was the coordinator of the proposal, the writing process of the proposal. At the same time, I also the PA of 2 additional projects. One of these is a Lansam project, and another one is a traditional. And this allows me to view the different types of Horizon Europe project funding with different perspectives. With respect of 4G project, the project I am coordinating is a research and innovation action under the Cluster 5, Climate, Energy and Mobility. This project is started in October 2023. The duration of this project is 4 years, and now we are in our second year. And we have already completed our first reporting period successfully. The consortium of 4G project, in the consortium of 4G project, we are 12 partners and all affiliated entities from 6 different European countries, from Greece, Ireland, Romania, Austria, Spain, of course, and I don't remember the other one. But in all consortium, we are large industries, small companies, medium companies, research and technological institutions, and universities. That's all for my part. Thank you.
Thank you, Silvia. And I think we can go now to some more specific questions on proposal writing and grant management. And since I have you on screen, I will start with you. So compared to other proposals that you may have prepared and submitted, what kind of differences did you notice in proposal writing? And what would you advise someone considering applying to a topic using lump sum funding?
Okay. In my opinion, the 2 main differences between lump sum projects and traditional are in the section 3 of the template. The template is the same, but now we have more quantity of work packets. You have to distribute the activities in more work packets. But the most important thing is that really matters in this project is you have to do the work described in the proposal, and the only way you have to justify this work is through the deliverables. The deliverables now we have too much because you have more work packets. And is the only way you have to show when the work packet is completed. For this reason, when you write a proposal, the deliverables must be clearly defined and well aligned with the proposal schedule and the tasks over the time from the project. On another hand, the other main difference with the traditional projects is the Excel budget file. In this case, it's more complex to fill in, but because you have to specify the cost for each work package, but if you have done one time, it's not so much difficult. Only you have to take in account or better supervise or check some points like what the number of partners are involved in each work packet, and make sure that the partners involved in this work packets introduce expected costs correctly in this work package, or for example, in the personal, travel, outsourcing, or equipment. One simple sample I used to talk about is, for example, the cost of the travel. You have different kind of travel around the project. One of them is, for example, when you have to present the result in the General Assembly with other partners. This cost you have to input in the work package of the coordination. But for example, you have to travel for a congress, for an event to present the result at the same time, but it's different. And in this case, you need to input these codes in the work package, for example, the dissemination and communication. This is some simple sample, but you need to take in account what the cost you have needed for each work package. With respect the other considering, you need to take in account if you have applied in a lump sum project. Well, it's true that you have several work packages, and for the reason you need to consider the nature of your activities, and you're sure that they are logical grouped with the same work package. You have to take in account another aspect, like consider the number of partners in a work package, the interconnection between the different activities in the project, and even the level of the risk associated with the activities in the work package. I hope I understand my overview of the lump sum project.
Yes, thank you for this. So I think it's interesting for the proposal writing. And now for the management of the grant. So another question: do you consider that there is something different in how you internally manage the grant compared to an actual cost traditional grant?
Yes, it is. Yes, it is. The main difference, for me, is perfect. It's better. It's the better thing we can do. Is there isn't any financial reporting. You only need to focus on the developing or working on the activities. You have only to do a reporting, technical reporting periods. You don't have to do any financial reporting period, and the partner only have to spend their time working in their technical activities. Because the most important thing in this in the lump sum project is to achieve not only in the lump sum project, in general in the project, is to achieve the objective of the project and to finalize the works. The work package have to be complete. In the traditional project, you had to do a financial reporting, and you spend a lot of time supervising the cost justification, not only your justification. If you are the coordinator, you have to supervise the cost justification of the rest of the partner, and you have to prepare the financial reports. Sometimes we have made mistakes. You need to fix the problems, or for example, sometimes the invoices are missing. You need to contact with the rest of the partner. All these kind of things are disappear in the lump sum project, and you are focused in your work, in develop your technologies, or to work in the technical part.
Okay, thank you very much for your feedback, Silvia.
Thank you. Thank you.
And I'm all curious now also to know about the experience of Martin and Drahoslav. So my first questions are, would you say that the reporting for your project was easier thanks to the use of lump sum funding? And what is your experience with declaring the completion of work packages, especially at the final reporting period where you have the possibility to enter different percentages of completion?
Okay, thank you. From our point, yes, the reporting is much more simple in the lump sum projects, as we are not obliged to do the financial reporting. So this helps us a lot. So also, as Sylvia said, that we were much more focused on the outcomes of the project, on the deliverables, and there were no issues with the financial reporting. In our case, we decided to somehow equally distribute the effort and the resources to our partners. So we have 5 partners and we have 5 work packages. And also all our work packages run throughout the whole project. So our case was that there were no interim payment in our project, but we also communicate this with our partners before the start of the project. So they were informed and ready for this situation. So we were focused on the technical reporting of the projects. We have 2 review reports, 1 interim report in month 18, I think, and the last was at the very end of the project. So this was our system of work. Maybe if you want to add something.
To add something, yes. I don't think that this solution is like possible for every project, since there are specifics, but we tried to distribute the workload as equally as possible right from the start. And I think that the possibility to keep all the work packages running throughout all the project, all the time of implementation of project, kept the things simple. So yeah, where possible, we would advise to not like end the work packages earlier, since from our part it was much less administrative burden for us and the time checking. So as was said earlier, yes, we were able to focus on the quality of deliverables, and I think that this really helps regarding the quality of the outcomes of the project. So yeah, our advice, since we successfully finished the project in due time, I think where possible, not to like distribute the work packages throughout the time, but keep them running.
Yes, but this is the specific situation that worked for us.
Yes.
Maybe there are some, if the consortiums are bigger, have more partners
and different tasks.
Maybe it is more convenient for consortiums to split some. I think the work package management is the most frequent case of the splitting of the work packages.
Indeed, thank you. Yes, this depends on the nature of the project, the duration. Well, the last question, since of course you have the full experience of the lump sum projects, so you already completed your grant. Is there anything that you would like to advise other lump sum coordinators regarding their management of the grant?
I think the lump sum funding is very good type of funding from our point of view. Maybe some advices or which work for us. Agree roles, effort, resources, and distribution at the proposal stage. So if you are consulting with your future partners, try to do the best to divide roles, effort, and so on. During the project implementation itself, it is obligation to have the consortium agreement. So many things about the payments and distribution of roles is in the consortium agreement. During the implementation, also keep regular communication with partners, not only steering committee meetings. And if you have any doubts and any things, try to communicate this with all partners as soon as possible, and also keep the regular communication with your project officer. This helps us a lot, because at the beginning of our project we were some COVID pandemic problems, so we have to extend some deadlines of some deliverables.
I think the first two major deliverables needed to be postponed since the availability or not availability of the people who were responsible at that time. So the communication with our project officer helped a lot to clear the things, to explain the things, and then we were not like under the pressure that we needed to explain something exposed. Yeah, so it's really helpful to keep the things between the project team or project management and the project officer from commission part like as reliable as possible to know about the developments.
Yes, maybe to add something, our good practice also was to run short and efficient meetings.
Yes.
Not to have online meetings throughout the whole day, but just to keep it in 1 hour and discuss all the things that were necessary. Also communicate all important deadlines and responsibilities well in advance, and also repeat it. Give all important information in written and also in advance, and also to set up some online shared collaborative space where all documents are stored, where everyone has access, and so on. So these are our good practices.
The member teams or project member teams were able to keep track not only on the work which was being conducted as a part of their task or specific work package, but there were possibility for them to see what else is being done and to contribute when they were interested. There were several times when they stepped in and said that something should or could have been done more efficiently, and we respected that, and they were able to contribute even to the task they were not originally meant to.
And last but not least, of course, act in line with your institutional and national regulations and laws.
It goes without saying.
Yes.
Indeed. So thank you very much for sharing your feedback as well. And thanks again to all our speakers for their availability and to take part in the webinar, and also to stay with us until the end for the Q&A session. So we will take now a short break, around 5 minutes. Maximum 5 minutes, and then we will come back with the Q&A. So during this time, please introduce your question or upvote again the existing ones, and we will look at this soon. Thank you.
So, hello, back to the session after this very short break. It's now with Andrea, myself, and our guests to answer your questions on Slido. And the top 3 voted questions are on the screen. I hope everybody can see them. I get started. I think the top 2 questions are very, very similar. They are both about what happens. Oh, we now have this one. I guess the top question has just changed. So let me read it out. Can you provide details on the progress and planned arrangements of the first ex-post audits, reviews of lump sum projects? Results, scope of the controls, criteria examined, documentation expected. Yeah, I mean, we don't share exactly our audit and ex post control planning, but of course, the type of control I mentioned is the ex post technical review. For this, you need any document that shows that you actually did the work. So if you like, in the grant, in the project, you only give us written reports, you don't submit to us any evidence. You basically report, this is what we have done, full stop. And in the ex post technical review, what we're going to do is we are asking you to send us the documentation to support, to prove that this is actually true, that this actually has happened. We'll then have external experts reviewing that documentation, come to a conclusion whether indeed the work package has been executed and completed as reported, or if they conclude some parts of it haven't, in which case we would then at this point make a correction. So what is the documentation you need? Well, every and all grant agreements that we sign have an obligation. There's no difference in lump sums, but lump sums have the same obligation to keep the documentation to prove the proper implementation of the project. And I gave you some examples of what kind of documents this might be. This is what you need to keep on file in case you are selected for an ex post control. So for the time being, our understanding is that the rate of errors in lump sum grants is going to be lower than in the case of actual cost grants. And as a result, we are probably going to select fewer. So the rate, so the chance of being selected, the likelihood, I should say, of being selected for an ex post technical review in lump sums is probably lower than being selected for financial audit in the actual cost part of our grants. But I can't give you exact numbers on that. And that is sort of, well, there is a selection process, which is randomized. Which is necessarily randomized to, in the end, be able to calculate representative information and errors from that. Next question, please.
I can take this one.
Yeah.
When the total purchase costs do not exceed 15% of the requested personnel costs, could it still be advantageous to fill in table 3.1H? How do evaluators look at such a voluntary effort towards transparency? Indeed, if you do want to include more information on your costs, on your purchase costs, even though they don't exceed 15% of personnel costs, of course you can include this information in the table 3.1H or in the any comments tab of the detailed budget table. So either in the Excel file if your topic is using this, or in the online form if your topic is using that. So indeed, the more information that you can provide, the more justifications, I think this is better for the assessment of the lump sum budget.
Maybe we should just, Andrea, isn't table 3.1H the one that we removed, or is does that still exist?
Yeah, this still exists. So
Okay.
It's the purchase cost one, which now is focused on equipment,
Okay.
on major equipment.
Right, thank you. So indeed, 3.1H is the table that we still have, but that has been simplified, now focusing on equipment only. So indeed, the question may be, if indeed you have a piece of equipment which is 10% of the personnel cost, in other words, which is then still probably a significant amount, there I think it would be indeed very advisable to still explain why you need that equipment and what it costs and have it justified indeed. Next question. We are a large organization involved in a number of applications. Recent evaluation summary reports show conflicting lump sum feedback between evaluation summary reports. I mean, I guess what you mean is you have different ESRs from different proposals and you believe that the feedback you get is inconsistent, and some of them have budget cuts. What will the Commission do to ensure consistency and fairness? Leah, well, I could only, of course, I can't really answer that question because I don't know your cases, so I can take your word for it that you believe there's inconsistency and unfairness. Generally speaking, what I have asked the national contact points on several occasions in the past is to show to us, if they like, they can contact me, such cases where they believe that the lump sum evaluation has not been comme il faut, where there have been mistakes, where there have been cuts that have not been justified, or that cuts despite what you think is sufficient justification. So we would of course have to look at this case, and it's rather impossible to judge from your question right now. So we would have to analyze, and then we would be very happy to see what can be improved. However, I must say, despite the fact that I've been asking to share such alleged cases or problematic cases since probably 2 or 3 years, not one single case has actually been reported. So here, well, I know this may be difficult for you, but of course it's very difficult for us if never any of these problematic cases are reported to us. It is very difficult to follow up on them. So here I would really ask again, maybe talk to your national contact points, or you could theoretically also really present this case in, well, I'm not sure in which other format, maybe there is, but the important bit is, if the information doesn't reach us, or the detailed information on these alleged cases of, well, let's say, mistakes in the evaluation procedure, it's very difficult for us to follow up. And so I take your word for it that you believe there are problems, but let us know about the details. Otherwise, what can we do? Thank you. Next question. And I think if the next, I know, Andrea.
So are the review periods fixed at 18 and 36 months? Because if we have lots of deliverables at month 24, we then have to wait until after month 36 to be reimbursed. So I think the question is about the reporting periods, which indeed in Horizon Europe, the standard duration of one reporting period is of 18 months. But of course, there might be exceptions, and you can actually mention your preference of the duration of the reporting period in the application template. And then the reporting periods will be fixed at the grant agreement preparation stage together with the project officer. So yes, I think this answers the question.
Maybe we should add that, just to avoid any misunderstanding, we are not reimbursing your deliverables. Deliverables are associated to a work package, and typically a work package has a number of deliverables associated to it. And then that if individual deliverables are completed, this has no meaning in terms of reimbursement. We wait until your work package is complete, and then we wait until the next at the next payment. And indeed, payments can only ever happen at the end of a reporting period. So indeed, you could think about organizing your work plan in a way that allows reimbursement, that you have work packages completed by the end of these reporting periods, such that they can be reimbursed. Next question, please. So I think even the next two questions, I think initially I saw them on the screen and now they are back with us. And here we'd then also like to ask our guest speakers about their experience, because I can effectively only repeat, well, you know, if you have, of course, what you described there, a case of a rejection of costs for senior staff in this case, and you believe they have been duly justified. That's all. And then, in other words, there's a mistake in the evaluation procedure. I can only repeat what I said before. I heard also in previous webinars that these cases exist. I have not still seen a single case. They, for whatever reason, we have been asking to actually show the details to us, such that we can actually form an opinion ourselves, maybe talk to our colleagues who are responsible for these evaluations. but the mere allegation without the details we can't solve, and we can certainly not solve here. Maybe bear in mind that personnel costs are not only a result of the monthly rate that you apply. Of course, the other effect is the amount of resource. So how many person months of this full professor are you charging? And is this clear from the proposal that indeed all this work time of the senior professor is needed? Because that is, of course, one element, the total amount of resources and the cost per month together make the cost that you apply for. So both need to be reasonable and clear from your proposal. Again, and maybe I can, well, what I can of course clarify is no, the personnel dashboard, the dashboard for personnel costs does not represent a threshold. We have recently again updated the guidance and the instructions for that dashboard again to make it even clearer that this is not the case. The dashboard is an indicative resource to show what kind of personnel costs are reasonable. Well, you know, we have had cases where people have applied for 15,000, 20,000 euro for a postdoc per month. And this in the vast majority of EU countries is definitely more than they cost. So then the only reasonable thing to do is to cut it. Now, there may be more gray area cases that are more difficult to judge. But the experts may, of course, come to the conclusion that your justification was not was not convincing. So, but you know, while I believe that you are unhappy about this decision, without looking at the details, we can't possibly go further into detail. The same is true for the next question. There is. For Eleanor's question, I think we can jump that because I couldn't really say anything else about it. Let's go to the question after that. No, maybe we should ask our guests if they had any problems with cost rejection, especially for personnel cost, because indeed, as I said, personnel cost is the bulk of a typical project's budget. So did you in your projects have any personnel costs rejected?
No, we have no such experience, but saying this, we really took into account that there are differences between the salaries, especially in the old member states and the new ones. So, for example, our wage in Slovakia is lower when compared to Netherlands, for example. So we incorporated this knowledge right into the application. So I think there was no reason to have any problems with the declaring and justification of the personal cost. And we didn't buy any technologies or something like this. So all our expenditures were really clear and well justified. We really took great pain in order to make it so.
Anything to add, or, I mean?
Oh, that's it. Yeah, thank you.
Okay, thank you.
In my case, I don't have any problems with this kind of questions. By the moment in any European project, not only in the project I am coordinating, in the rest of the projects, we don't have. I think it's clear, especially in the Lansam project, because if you complete the Excel file correctly, you have problems.
I mean, indeed, as I said, we have approximately 85% of the lump sum projects that are funded have no change to the budget whatsoever. So they are funded as requested. So that indeed explains that many or most beneficiaries have not yet come across a situation like that. But yeah, of course, the other 15%, there is a cut. And I guess that the beneficiaries then are not happy about it, but that is indeed a core principle of the lump sum approach. We agree on the price up front, and there must be a possibility for the Commission to correct the lump sum before we sign it. So that is really a key part of the approach. Of course, it's not that we want to cut it. It's just that if we come with the evaluation to the conclusion that certain elements are not correctly estimated, then we need to do a correction. And again, please go back to your national contact points. We are in frequent contact with them and present concrete cases that we can analyze and that we can see, which then may also help us to improve the system ultimately, of course. In this way here, we will not be able to solve it. Next question.
Yes, so could you please clarify how salary payments work under the lump sum scheme? For example, for a postdoc, if the lump sum is only paid after the completion of a work package or activity, who covers the postdoc's salary in the meantime? Here just to clarify that the payment scheme in a lump sum works in the same way as it works for an actual cost grant. So this means that you will also receive pre-financing when you start a grant, and this can be quite generous if your lump sum grant has only one reporting period or two reporting periods, in which case it is the pre-financing is 80% of the maximum grant amount. So you already have let's say a budget to start with your project. Maybe to clarify again that indeed this will come when the work package is completed, which might have more than one activity. And I think this is it.
Yeah, I think this is clear. Yeah, you always get a float at the beginning of the project, and this is not different in lump sum grants compared to any other grants. And that float should normally carry you through a long way. Practically most of our projects get 80% or 50% of the, depending on your situation. But it's in any case, it's a very significant portion of the total funding that you get up front. And this is what's going to pay the postdoc until you get the first real payments. Next.
Okay, maybe a little thing from our side to this. Our good practice was like as in the consortium agreement. Our pre-financing was the 75% of the total grant amount, I think, which is quite a good portion of money, and it was divided into two installments. The first installment was the 75% of the pre-financing at the very beginning of the project, in the first month of the project, and then the 25% in the installment 2 was provided in month number 9, I think. It was provided on each partner's like individual progress report. So we ask our partners to show us, to give us the report of all their activities, and based on this, we release the second part of the pre-financing. And then we have, of course, the payment of balance at the end of the project. So I think with the 75% of the pre-financing, in our case, it was totally okay to cover all our activities in the projects. That's it.
Thank you. Right. Yeah, I think we've answered that question as well. There is nothing really, I think we don't, there's not much really we can add to dealing with the personnel costs and the dashboard. I understand some of you believe that there are mistakes in how this is evaluated, but so there is really nothing we can add at this point. So let's skip the questions on allegations that there have been inconsistencies in applying the dashboard, or I think the principle is really the same for all member states. It's totally clear that different member states and different other countries, third countries, have different levels of salary. And this is reflected in the dashboard, of course, as we saw in the example. In fact, the dashboard shows exactly the distribution that these precise member states have signed as their own budget in actual cost grants. So we use the data from this member state. So in other words, be it a Belgian or be it a Polish university, they are compared with other Belgian and other Polish universities respectively, and not with anybody else. So if they are expensive relative to other Belgian or Polish universities, this is when we would like to see justification. And that justification is, as far as I'm aware, normally accepted. And again, it goes without saying, if you are very much above this value that you see in the dashboard, the more you are above it, the more you need a compelling reason why you are so much above it. So we have cases that where this value is maybe double or triple above what we can see in the dashboard. And then, well, you are very, very likely experiencing a cut unless you have really extremely good and clear justifications. So also one could, of course, ask the question, if this is working for these institutions and these member states in an actual cost approach where they sign for exactly these amounts, why would that not be possible in a lump sum approach? The idea is always that the cost estimations that you provide should be exactly the same in an actual cost grant and in a lump sum grant. There should be no difference whatsoever. The only difference is that you provide more details, but the levels are, of course, exactly the same. It's not that you should ask for more or for less in a lump sum grant. So indeed, the question arises, why would that be creating a problem in a lump sum situation for these beneficiaries and member states when it works for them in actual costs? So that is the inconsistency that I see. Beyond that, I don't think we really go much further with this topic here, and maybe we can have some other practical questions on lump sum funding. So this is indeed still a practical question. Yeah, well, so far we still have the vast majority of grants that we have so far are actual cost grants. If we come to 50% of the call budget using lump sums in 26, 27 maybe, that still means we probably have at least as many actual cost grants. The future beyond that isn't known, at least it isn't known to me. So for the foreseeable future, we will have more than enough data coming from the signed actual cost grants. If ever we go to a situation where the actual cost grants become really a minority and we don't have these data anymore, then of course we can go and use the lump sum data that we start collecting now with that online system we are rolling out in the year 26. Next question, please.
How do you account for inflation over the period of the project for personnel costs? This is not yet visible in the dashboard. The personnel costs is based on number of previous years. So yes, indeed. So the way to account for it is to, of course, justify and explain that you have maybe higher costs because you expect inflation and you take this into account. So I think the key here is to really provide a justification for your costs, so that is also assessed in the correct way by the experts as well.
Again, one should also add inflation is something that affects all our projects in the same way. There is no difference between lump sums and actual costs. What we sign is a maximum grant amount, so you have an envelope, if you like, and within that envelope, you're expected to carry out your project. You can never get more than that maximum grant amount, but in certain situations, you could get less, but you can never get more. So you will, within that envelope, you have to carry out your project, regardless of what happens in terms of inflation or salary increases. And again, in both project types, you are expected to use the expected inflation as part of your budgeting. So you estimate your costs over the project duration, and this is what you put in. we have absolutely instructed our experts to be aware that costs can increase in the period in the 3, 4, 5 years after the project has started, and this is a perfectly valid reason to also take into account and to justify that costs may be higher than what is indicated in the dashboard. However, well, we see there is a big distribution of costs, so there is not just one cost. That it still needs to be reasonable, and it still needs to be in relation to the dashboard, which gives because let's say the costs that you see in the dashboard have been subject to the exact same thinking. This is if I take an actual cost grant that was signed in 25, the expectation is that these personnel costs that are signed in this grant have taken into account the inflation over the next 5 years. That is because they were expected to budget the costs for their project in the future. So this is, if you like, already taken into account by the fact that we take the budget that people have estimated in their actual cost grants. But having said that, it's still, if you expect that there are particularly high inflation or special rounds of salary increases, you can absolutely take that into account. You just need to make a reasonable and convincing case that this is particularly going to increase the cost of your project or this beneficiary. The same is true if you have a particularly high share of senior staff in your project. Well, let's say most projects have few senior staff and then more junior staff, and but this is of course different from project to project. However, if in your project most of the staff are full professors, or more than half of the staff is full professors, you should certainly explain why that is so, because that is a bit unusual, and the experts might certainly have questions unless you justify that very well. Next question. Should I take it again, or yes, indeed, the lump sum scores, and we brief everybody very clearly, they must not affect the scores if you have comments on the lump sum budget. And if you, again, this is a case that you describe where you believe that has been a mistake in the evaluation procedure. I should actually also add here, you can always, of course, do a redress. The redress procedure is exactly there to address a mistake in the evaluation procedure. So if you believe that your score was lowered because you had overestimated cost item in your budget, and then indeed it shouldn't, then you can always go for a redress and say that was a mistake in the evaluation procedure. So that is, it should not indeed affect your score, except, and that should also be clear from the ESR, the evaluators considered that your budget was really particularly problematic to the extent that it was flawed, impossible to evaluate properly, not just needed some corrections left and right on one or other cost estimations, which, I repeat, should not affect your score. So for me, what you describe would be a case for a redress, if that really is what you have. And this is actually true for all the cases where you believe that your evaluation was contained mistakes and did not follow the rules. You have always, even in fact, in case your project has been selected for funding, you can still go for redress if you like. If you believe I've been selected for funding, I've been invited to grant preparation, but there have been cost cuts, for example, that are not borne out by the facts and that are not following the procedures and that are not justified, you can still then go for redress. And one step below that, you can, of course, and maybe if you believe that was a mistake, you should inform your project officer during grant preparation that you believe this as a mistake and should not have happened. And why, of course. Next question.
What if a partner performs their tasks in a work package, but other partners don't? No one gets paid. So if at an interim payment the work package is not completed, then indeed that work package will not be paid at that point in time. But the consortium can still complete the work packages the tasks, the activities in the subsequent reporting period. And if, let's say, at the final reporting period, we have still this situation that one partner performed the task while the others don't, so we have a partially completed work package, the consortium can, the coordinator can include the percentage of completion in the system when they declare the work packages. And this will be assessed as such by the project officer. So there is a way to know who did the work, because we also have the technical reporting template, so in which you need to describe who did what. So
yeah, maybe Ed, because I think Kati is in the first instance, you're right. If the work package isn't complete because some of the partners haven't done their work, the work package isn't paid. That's indeed the approach. But as Andrea said, at the end of the grant, we can pay it partially, and we have also the possibility to pay partially to only one or two of the partners. In other words, that the sanction for incomplete work package can be assigned to a specific partner or subset of partners. That is possible if the evidence is there. Also, the coordinator has that possibility, or your consortium agreement can clarify what happens in such cases, that you have underperformance in part of the consortium, how that is financially then taken care of. And maybe here we could ask also our guests if they have any precautions in their consortium agreement in case of underperformance or no performance. I don't know if that's something you have in your consortium agreement. Luckily, apparently you didn't have that case, but would you have been prepared in case it had happened?
Fortunately, it was not our case. So all our partners were completing tasks and deliverables in due dates. So fortunately, we do not have to apply some sanctions, or how to say. So this was not our case.
Yeah, but it was stated in the agreement how was the procedure in this case. But yes, we were lucky. We didn't need to apply this. Yeah, but it's good to have something in case of this worst scenario, which would be applicable based on the grant agreement.
I think we were following the standard DESCA consortium agreement or something like that, and I think that there are some things about this, but as we said, fortunately, we do not have to apply to this.
Yeah.
Thank you.
This is one more remark, maybe. As Martin stated earlier, we really communicated all the task well in advance. It was not like a couple of weeks or even months, but we regularly kept track on what is to come, what is the timeline of the project, where needs to be finished, what. And we regularly approached our partners with inquiries, whether they are on track, etc. So yeah, there was really limited space for them to not perform on time. But okay, as I said, maybe we were lucky, but all our partners were really we could rely on them, and they really delivered everything they needed to in due time and quality.
Thank you. So yeah,
I will need to add something. This kind of problems usually happen when a company disappears, for example, a partner disappears of the consortium. And it's not usually, but sometimes it happens. Not only in the Lamsan project, in the rest of the project, one partner decide don't do the work because disappear the company or some kind of problems. And in this when happened something similar to this, the coordinator have to detect this kind of problems, and you can introduce another partner in in the consortium, or the activities of this partner can be assumed for other partners of the consortium. In the case of the lump sum, to do this is easier than in other kind of traditional project, because you can move the budget better. You can be amendment, but is, in my opinion, is easier. And in some projects, this kind of problems happen, but not because a partner don't do the activities. Is usually is the partner disappear of the consortium. Yeah.
Bankruptcy cases with small companies, I guess, is unavoidable that every now and then small companies disappear. That's, of course, different to universities or institutional participants who are much more stable, and yeah, the institution is not going to go away in the middle of the project. Yeah. Anyway, it's good to mention the DESCA consortium agreement, which indeed I believe has some provisions also in case of beneficiaries not performing, and how the consortium can deal with such cases. Maybe let's go to the next question.
Yeah. So if we have 3 reporting periods and therefore 3 work packages for management, should we repeat the work package without description, objectives, tasks? Could we mention only the first work package and clarify that this work package will be repeated in each reporting period? So indeed, in this situation, you should describe the first work package for management, all the activities, the tasks, and then for the subsequent one, you can just say that the activities, the tasks will be the same as in the previous work package for management. So this is acceptable. Yeah.
So it's a clear yes. That's it. I think if we understand you in the subsequent management work packages for reporting period 2 and 3, you simply point out in no uncertain terms that the activities and the work for these work packages are the same as for the first management work package described above. Next question. Is it up to the coordinator to decide when the reporting takes place? No. That we cannot say like that. Could the reporting be every 16 months in a 4-year proposal? No. That would be an extremely unusual case, at least. As we said, the reporting periods are finally decided during grant preparation. They are, of course, taking your proposal, but it's sort of when you say decide, it's sort of that it sounds like there cannot be any decision or influence from the project officer, and that's not true. So the final decision effectively is taken by the commission, by the project officer on the reporting periods. There can be situations when they decide to have more reporting periods to control the project a bit tighter. So the way it works is the applicant, the beneficiary, makes a proposal, and to my knowledge, in the vast majority of cases that gets accepted, but in a few cases there may be the need to make a change to that proposal. That's one thing. And the standard reporting period is 18 months. So we work on the multiplicity of 18 months, and based on that we define normally the smallest number of reporting periods. That means in a 3-year project you have 2 reporting periods of 18 months. And in a 4-year project, you have 3 reporting periods, 2 times 18 and 1 times 12 months, and so on. So we try to minimize the number of reporting periods based on the basic unit of 18 months. Hope that is clear. Next question.
Yes. So how much pre-financing will the projects receive? Well, this is not changing because we use lump sum funding, so this is calculated in the same way for all Horizon grants. So as mentioned before, if the project has a shorter duration, so just 1 reporting period or 2 reporting periods, usually the pre-financing is 80% of the maximum grant amount. Then if it if it is a longer a project with a longer duration, so with 3 reporting periods, the pre-financing will be 53% of the maximum grant amount, and so on. So the more reporting periods the project will have, the pre-financing will decrease. I think we can go, yeah.
Yeah, maybe I can sort of in the last we can maybe have one extra minute for these last 2 questions, which I see, which are again mostly, let's say, budget related, and so. Yes, generally speaking, you can always, as I mentioned before, you can come back at GAP and try to argue your case. Administratively, what isn't possible if the cut has already been implemented and the responsible authorizing officer, we call it, so the responsible officer has decided to cut your grant, then in fact they were certain that this cut is justified, and then I think it's very difficult to come back. But if any cuts that are still to be decided during GAP, of course your opinion is going to be heard anyway. So it's totally understood that you need to follow nationally, that you have pay scales and that you need to use them. That's totally clear. Nevertheless, that doesn't mean that you can get just any rate, because the total personnel cost, as I mentioned before, is also determined by the amount of resources. So it's the number of years of a professor or the number of years of a postdoc that influence the total cost as much as the rate per month. So you need to come to a package that is acceptable. Needless to say, you also need to agree that within the consortium how the budget is distributed across the different partners upfront when you apply. And we have no say in that. And then there is the last question I would like to look at, is this no cost reporting whatsoever. That is true, and the grant agreement doesn't say that you need to keep documentation. That is a misinterpretation, I can really say. We have several frequently asked questions on that, because what I admit, unfortunately, it's a rather, let's say, legal language, as you expect in a contract, in an agreement, but this does not say that you need to keep timesheets or that you need to keep financial documentation, even less so that you need to report it. However, in case of audits, and in case, I would like to summarize it like that, in case you have these documentation, let's imagine you have a project, a lump sum project, where you keep timesheets, despite the fact that we don't oblige you to use timesheets. It's of course possible for you to keep timesheets, because that is what your organization decided. In case there is ever an audit by Olaf or by, let's say in a fraud case, or by the European Court of Auditors, they would have access to these documents simply because they have the legal right to access the organization's documentation in such cases. But that is different, that is there, that is also enshrined in the grant agreement, and I agree this gives rise to misunderstandings and is complicated. I would like and I would love to have a model grant agreement that is, let's say, more outspoken and simpler in this regard, but we have to retain the rights of the fraud institutions, that Olaf, and of the audit institutions to keep access to auditing all the beneficiaries of EU funding. That is what this is there for. It does not say that you need to keep timesheets in lump sum grants. It does not say that you need to keep or report financial documentation for the lump sum project. That is a misunderstanding. I think here I would like to close it. We are just over 12 o'clock. Thank you very much for your attention. I hope it was a little bit useful, especially in case you were new to lump sum funding and the 26-27 work program is the first time that you apply for a lump sum project. Good luck with that. And well, have a nice day. Thank you for being with us.
Thank you everyone for your participation, and have a nice day. Bye-bye.
Thank you. Bye-bye.
Thank you very much.
Thank you. Goodbye.
Thank you. Bye-bye.